And FYI, I'm not gonna lie, I only read like a verse, a little bit of a
Nah,
few
you good.
pages,
That's
but I
all you
didn't get a
need.
chance to really like
Yeah, yeah, you
tap
good.
in. So that's
It's
on
like
me.
cheese. It's like cheese. Like I said, it's literally like 5 chapters that are like not super long, and
Yeah, yeah,
then
facts.
the real part is just about breaking it down, so you can just really understand how trade, like what trading it really is, and then the next, like all the bottom section, that's really more for like how to use the tool. So you're gonna learn the idea of what trading is, how to properly trade, how to look at the candlesticks and read it, right? And
Yeah,
then
I have been starting each day for sure.
okay, so you read like the first couple chapters already? Oh, hold up.
Yeah, I only read like probably like the first one. I ain't gonna lie.
Yeah, hold up. I'm
Probably
I'm
the
gonna
first
hang
one.
up on
It
here.
ain't the whole chapter. Probably like the first.
Nah, nah, you good. I'm gonna hang up on here and then just go into Discord and then you can turn on your video on there.
Okay, gotcha.
Wait a minute, hold up. All right, so she should be good now. Yes, sir. Hey, LV. Hey, yeah, we here. All right, it's better now.
Okay. Yeah, it's
Let's
better.
go. Okay, so now you should be able to, like, you'll see like the share screen in there. You just tap it, it'll pull it up.
Mm-hmm. Okay.
But
You
yeah.
said share screen?
Yep.
Oh, I see. Yeah, I see yours. I see your screen, your whole screen.
Okay, so you can see everything. Now you can see like how there's the menu, or at
Mm-hmm.
least my. Okay, perfect. So yeah, so basically we just gonna really go over the first. So this part that says start and then goes down to like install
Okay.
and paste the ritual. That's really like
Okay.
that's what we're gonna go over. The rest of everything
Yeah.
else is more of the tools. So we
Mm-hmm.
can do a different time to go over that, but we'll go over just the idea of trading and then the tool
Okay.
stuff. Then we'll just do that as like a second set. But the tool part, what I'll encourage, because after we read like the first like or after we go over this first section, um
Mm-hmm.
I'll help you. You already have the tool on your thing, so I actually don't have to help you install it. So basically, what I'll encourage you to do after your homework is just gonna be tonight to apply what we talked about via the time. Like, the sessions are gonna roll in and just like pull up your charts at those times. I think one of your charts has the alert that goes off already.
Goes off, yeah.
Yeah, so that's gonna when it goes off, that's going off at the time that is actually gonna be making that move up or down. So the we'll go over this and then we'll be pretty smooth. And then you could just in your notes, like when we read one chapter or like we go over one section, you can just note or write down whatever questions while I'm going over that section. Um,
Mm-hmm.
but yeah, so if I
Not bad. I'm over here trying to see.
nah, you good. So like this, I think it pulls up.
Perfect. Now I gotta send this in tomorrow. That's why I'm just like, really, I could go ahead and put it in the Dropbox. I could go ahead and do that, but I'm gonna just do it tomorrow. So I'm gonna go ahead and do that tomorrow. Dropbox not too far from me, but I'm gonna do that tomorrow. Because
Okay.
walking anytime late tonight is risky business. Tell you
Sure,
that.
What is that about? Is that like the tax form
It's
or
the
something?
no, it's just the
But yeah,
this
it's
is
not gonna
business.
it's not gonna take long. I was
So
going over.
now, yeah, let's lock in. Let me lock in because I'm over here like,
Not you good. Asia session is about to start too, so that works in our favor.
okay.
Um,
So which one do you feel like you prefer better, Asian or London? Because I think you said London before,
yeah. The
but
idea, the idea is you really want to leave Asia session alone, unless there's something like really clear, or if you're trading like any pair that has the Japanese yen in it, then you want to trade the Asia session because that's when the movement for the news is gonna happen during the Asia session for Japanese yen. If you want
Mhm.
US, if you're trading anything with US dollar in it, then you want to come at New York because that's where the US dollar is gonna have news release for that pair. Now it can release at other times during other sessions, but mainly it's going to release in New York. If you have like Euro
Mhm.
news or GBP, Great Britain pound news, that's going to release during the London session. So like last night we was over
Okay.
here, I was trading and shit. I didn't realize the both days that I've been taking active orders, like I was really not looking at the news first before even taking any trades. And that was another
Yeah,
mistake. So that's because when I took my moves, they weren't wrong. It's just they don't have no fuel behind it to even be moving. So now it's just I'm in limbo and the market hasn't decided what it wants to do. And if it shakes me out, I can't even be mad because nigga, you should have waited for the news. You know what I'm saying? So
that's real.
and it was cool, like, cause I was doing it live stream when I was going over this stuff last night, and I only streamed the charts last night just so people can, just different pace. I don't have to game it in between where it takes our attention off, whatever, so they could really absorb
That's
what's
real.
going on, and they got to see real time how I was getting faked out, how I was like having to switch positions back to the overall move just because I noticed the time of the week, things like that, and how I'm piecing it together live to basically adjust my decision. So, and a lot of the trades from last night still ended up working out, but because my
That's
my
real.
account had got chipped down, I had to like close most of the positions and then basically just scale in at a lower risk and then just build it back up. So the
Mhm.
goal is that we don't want to really have any setbacks. We want to have a consistent growth over time. And since you're a fresh trader, I don't want to train you any of the bad habits that I've trained. So I'll defer you from a
Mhm.
lot of what I'm doing. Um, like even with Muhammad too, is like I think I showed him how I was in multiple positions in one session, waiting for those to play out. But doing that would have been fine had it been after a news release. But I did it prior to. That was the problem. So that's where all the trades they don't really move without having the fuel. So that's what we're gonna kind of go over, and that was the section I ended up adding in the operating manual.
Mhm.
So that way, when you guys read it, it'll literally say when the volume actually arrives, and then it'll show you like how the news and stuff works in the images. So,
Uh-huh.
but yeah, and it'll even tell you what
Let me get my
websites to use. But yeah, so
okay.
yeah, you ready?
Let me get my pencil out.
We vibing, we
Yeah,
vibing.
I'm ready
Yeah. So you
for
gonna rock with
sure.
it. You gonna rock with it. But nah, for real, I appreciate you actually like wanting to lock in with this because again, like you got time, you got
No,
like
for
6 months
sure.
to really sit down and watch charts and see how it moves and the cycle
Mhm.
of it. And then, like I said, you literally could trade with me real time and give your consensus of how you approach it. Because
No,
again, the,
that's real.
the
And
the
I
goal, my bad.
no, you good. I forgot I got my other phone too, so I can
Mm,
actually like look at live results on there and stuff too, or just even do the
mhm.
demo or whatnot. I can see my results through there and stuff
Yeah,
too. So that way I could be learning here and then,
yeah.
looking at the results on my other
What's
phone
going
too.
on. Yeah. And I mean,
Mhm.
since you have like a lot of the tools, I'm showing you how to use in a way you can just copy paste your orders like we did. So
Mhm.
that's what's gonna be pretty fire. I did also
Mhm.
update some of the scripts, but from here on, I'm gonna leave y'all with the scripts that I have. Because that's like pretty good, but there's a couple of tweaks I just made recently, but I don't want to have to
Mhm.
like every time I update, send y'all a whole new script for y'all to go reinstall and re-update. So what I'm gonna do is like
That's
pay.
real.
I'm gonna pay for like the premium membership where I could publish it and then get it finalized. And once it's published, then I'm gonna send y'all the invite based off y'all requesting the link from me because that's basically
Mhm.
people have to request it from me, so I guess I don't get in trouble. It's like a little rule on their website. So essentially, y'all will request it. I'll send y'all the link, and then from there, for then on, you'll literally just go in Trading View. You'll press like the plus symbol, and then you can search up my script, and then it'll just let you
Okay.
request. I'll let you through, and then now any update I do is automated, so you'll already have it on that script without having to like re copy paste everything. So
Mhm.
but yeah, so we can get into it. And I think I forgot there's like one more thing I mean it was me to mention. It'll come back.
Today's the 25th.
Yep. 25th of August. Oh, but yeah, that's what I was saying earlier. Yeah, so you got like a cool little 6 months to really like sit and observe the charts. And I think honestly that's more than enough time to really start getting a hang of like the manipulation time versus the real moves playing out and stuff like that. Um, but
Mhm.
yeah, so that's gonna come close. And then of course, like what will really benefit you is like you just stack up enough to where maybe you end up getting whatever prop firm or like just funding your live a little bit to where now, okay, cool, I
Mhm.
got a little $200 account. Cause like my friend Lou, he's so disciplined that he took his $200 account to 100,000, 6 figures. So like it's definitely
Nah,
highly
that's what.
doable. And it got to a point he's trading one trade, getting paid 8 racks off one trade. And you saw the 2 racks that
Yeah.
you made off that demo setup. Now
Yeah.
again, demo is slightly different, but at the end of the day, it's showing you, you know, getting a little bit of skin in the game, how your emotions should be. Like you should be completely detached from the outcome of whatever trade you took. So when I called you, you
Mhm.
had like completely no idea. You like shit. Let me check right quick.
Yeah, I
You know what I
saw that
mean?
they was like stacking the trades and stuff. It was telling me
Yeah.
London High, this low session just hit. I'm like, what?
Exactly.
Like
Yeah.
what's I don't
Then
know.
you look
It
back
seems
on
like
the
a
app,
good
you see that
business.
that jaw
Yeah.
hit, and then where it hit at, it
I'm like,
completely
okay.
turned. And the thing is, if I would have told Muhammad to get in that same trade, the one thing that would have been good to see as like a I guess a trial run is how y'all emotions would have played out while holding that trade. Because maybe Muhammad would have been like looking at it more often, whereas you just woke
More
up.
often.
You woke up to the
I just
play.
woke up.
You feel me? So that's where the
So
tendencies kick in.
that's what I worry about for me as a trader. Like the sleep be getting the best of me sometimes. So I'd be like,
Yeah.
shit,
No, that's
if I
fine.
lose
That's
out, I lose out. If I win,
yeah,
shit,
yeah.
I'm up. You
That's
feel me? Like
fine.
I got a
Yeah.
very, I
No,
don't know,
that's
but who
good because
knows?
at the end of the day, the biggest thing is like I said, from my mistakes that I'm learning is that I put all my results in AI. AI was like, honestly, gang, you not losing because you wrong. You losing because you keep closing your trades early. That's literally what it was telling me.
Yeah.
I lost the most of my money because I kept tampering with everything. I after planning it, it's done. You know what I mean? You gotta leave it. You gotta let it run its course. Because even if I would have thought something was gonna lose, it may have ended up becoming a winner. And if I thought someone was gonna win, that could end up being a loser. So letting that course play out is what a lot of newer traders and like people that have experience like me still have issues with. So now I'm getting to that point where
Hmm.
like, okay, I could everything's measured up and then we can just play ball. But all right, let's get into this quick because I'm gonna try to have
Mm.
us kind of we'll do this and then we'll look at a little bit of the charts itself just to kind of look at the theory at play. So the first thing we're gonna go over is just what is all of this. Okay, so
Mhm.
it just
Yeah, I'm about to say, what is trading?
yeah
Like, what is trading?
yeah.
Let's
So
start out
so
there. I guess.
let's start that. Yeah. So trading, right? If you go, I had it broke down to me like this as a beginner, right? Is that when you're day trading, let me move you out the screen just so you can see like the
Mhm.
content. But when you're day trading,
Gotcha.
right, all you're really doing is the digital version of when a person is going from one country to the next and they're converting their money to that currency. What tends to happen when you go
Okay.
across the borders to another country is they look at the exchange rate or the weight of the currency against the other currency so that either you're losing money when you transfer it or you're gaining money when you transfer it. So if we go to Guinea, right, and I take $20, you already know how that game go. Mom always talked about
Hmm.
how that John would go crazy. You feel me? Send $10, it's like a meal, right? Inflation is crazy
Okay.
out
Yeah,
there.
that's real
You
shit.
feel me? But the but the thing
That's real.
about it is there's an exchange rate that's set. There's like a percentage that's set where either you're gonna be gaining money in Guinea franc or losing money in Guinea franc by just switching it over. So that's the same concept playing out on the charts. Anytime you look at one pair, you're looking at one economy versus another economy. And the conditions of that economy determine the strength of that currency, right? So if I'm looking at
Mhm.
in this case on the chart, I could pull it up, right? I'm gonna take all this off too. We want no confusion, right? So if I'm looking at like the Euro Australian dollar, right? Right now, over the last like year or so, it's the Australian dollar has been stronger than the euro, right?
Mhm.
So in this case, if I go from Australia to Europe, I'm basically losing out on money by converting to go over to euro dollar because it's weaker. And that's why there was a trend
Gotcha.
direction of the market falling that way due to the economy, whether it was CPI, which is like the release of the notes of the job, the interest rate decisions may have impacted the strength of the currency. And that's why in foreign exchange, it's a lot more volatile. There's a lot more movement But at the same time that there's a lot more spikes and movement, the market actually likes to be in balance more often than in a motion. So a lot of times the market will break out and then snap back into a range, or it'll break out and then sustain and keep going in a nice clean trend. So that's essentially what my tool helps you figure out, is when it's breaking out to go into a nice clean trend, or when it's going one way to snap back into the range and then maybe go the other way. So that's all just behavior of how the news releases. So that's what foreign exchange is. It's literally, that's the bare bone concept of foreign exchange. But now when you're day trading through their charts, you're just looking at, instead of me going from Europe to Australia to basically get more money in real life, I'm just gonna go look at the chart and I'm gonna press sell on it because I know the value of the price is at a high. And if I can get in that position as a person who owns a short holding position, I can make money off the people that are pretty much selling off, or at least buying at this position. Because in order for that exchange to happen, the price that's up here, someone has to buy, but the economy has to be in a state where while someone's buying, the sell is the overall trend direction for you to make a gain. So I was just comparing it to them, to the people on stream like this. If I had a pair of J's, right? Let's say this is not euro, Australian dollar. Let's say this is the new gammas that just dropped. Okay. And the gammas just dropped and it started off on the right side over here at 1.64458. To make it easier, let's do a flat number. So like at 1.6500, right? So I'm gonna just double click, go 5000. Okay, J's just dropped. This is the price. Now, a lot of people know the value of J's at that time, right? And what happens when people know the value of a J and it's cheap? The demand goes up, right? Because now hella people want that shit. It's like, damn, that shit's 1.65. Bet I'm finna buy that bitch. You know what I'm saying? So what happens is probably they buy it until now that motherfucker expensive as fuck. It's 1.82 now. Let's go at 1.8. Let's do it 1.80 flat, right? They bought it up to 1.8 80,000, right? Now what you notice is the sentiment shifts. That's too damn high, and them J's is not as valuable no more. So what do the people that have them?
Because everybody already got it for like 1.6, was it? Yeah,
1.65. Yeah. So now they know, okay, the sentiment is shifting because the price is too damn high. And while I got it while it's valuable, let me sell them hoes. So now they start selling it at 1.8, 1.79. And now the demand is going down for the J's. So that's why the price that people are selling it off at is dropping too, because there's no more demand for that. Does that make sense? So that's the same concept of what's happening when you look at these candles go up and down. It's just the supply and the demand is shifting.
Like a pair of
exactly. Literally, like no bullshit. So this is why it's easier for people to conceptualize stocks though, because if I go on a stock chart, them J's now it's Tesla instead of the J's. Now it's Walmart. Now it's Amazon. Now it's Aurora Cannabis. Now it's Nvidia. Now it's Apple. You see how the game go? And now you're just doing the same concept with just the digital version of the value of things shifting. So that's why now you know, oh damn, it's Apple. They're just about to drop a new iPhone. Nigga, bet. What's the price looking like? You know what I mean? And do a lot of people want it? That's really the two things they're looking at. So the news folders in foreign exchange, that's like the sentiment around what you're looking at, so that you can understand like where people's heads are at about each currency and the strength of one over the next. So now you can get a better sense of where supply and demand will end up falling and whether things are looking like I want to buy at this price or sell at this price. So that's trading in a nutshell. That's what's going on here. So that's why when you look at cryptos like Bitcoin, that shit ain't going nowhere because people use Bitcoin, you feel me, like all year round. It's a common transaction. Now it's in circulation. So even when people are like, oh, it's down right now. Guess what? The demand done went down, right? Not a lot of people want it. What happens when Bitcoin spike back up though? and it's back up at them highs. Niggas like, oh, bro, this shit at 100K, bro. I'm about to buy Bitcoin. It's too damn late because them niggas that bought it
Yeah.
at that low price, they know you rushing in to buy off the timing of the hype of it, and they're gonna sell it to you while you buying it at that price. And now y'all switch positions, but you're gonna lose out by having it unless you're willing to hold it through the next dip. So if you look, if you don't, would you rather hold the J's and wait for it to dip off and then buy it, or would you rather just buy in at the highest price that it's at while the demand of it's gonna go down? You feel me?
Mm,
I would rather buy it
yeah.
at the next low price, because
The
if I
next
know
low,
I
yeah.
know niggas don't want it no more, shit, cool, I'm gonna wait for it to come down. When niggas don't want it, price drop, bet I'm gonna get in. You feel me? So that's
Yeah.
the same philosophy. So now we're gonna go over like just the reading, and this is gonna be pretty quick from here. So why any of this works, or at least let's go over the tool itself. So the chart suite is the name of the tool. It's basically it includes the sessions that you're gonna be trading. It includes the key levels we're looking at. It includes verdicts, which is basically your signals built into these key levels, and then it shows you your ADR, which is that the amount of money they spent on that specific chart for the day, and then you have your moving average, which is like it'll tell you the trend direction, whether the sentiment is going up or the sentiment is going down, is what the moving average is for. So without looking at news, you can already see what the sentiment is by looking at MAs. And then you have the overall structure of the market, which is the structure is essentially, that's like when we were talking about how there's a stair step formation with the chart. So it goes higher, 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 low, higher, higher, low, higher, 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 low. Then it goes lower, low, lower, high, right? So there's a stair step formation. That's market structure. So that's what the tool basically maps out automatically for you, so that you basically have it all in one screen. Why any of this works. So it says read this page before the tools. 10 minutes here is what makes the next 40 chapters mean something. Without it, the toolkit is a wall of settings, and with it, every setting is obviously answering a question you already have. The market in one paragraph. Okay, so there's large orders that cannot be filled where there is nobody to fill them. The only place on the chart with the reliable crowd of resting orders are the obvious ones, just above an obvious high or just below an obvious low. At yesterday's extreme, at the level everyone drew. So price goes there, not because the level is magic, but because that is where the fuel is. It reaches it, it takes what is resting, and then it either continues because real participation arrived, or it turns around because the reach was the whole move. So that is the entire framework. Everything else in the manual is an attempt to answer one question at the moment it matters. Was that reach paid for, or was it just a reach? So the whole idea.
Right. Not, or was it just a reach? I don't know why
Exactly.
this slot way.
Oh
Or was it
God.
just a reach?
Because it's just that aspect of like, if motherfuckers think the J's gonna get back hot and they bought it at the high, but it's like, nah, it's a reach, gang. It's not that hot no more. And that's what the tool
Exactly. Yeah.
tells you. It's like, nah, is it really hot or is it just bullshit? You know what I mean? So liquidity, right? Liquidity is basically the stops that rest above your highs and below the lows. Okay. The reach is the price that travels to where the orders are sitting at. And the proof is if either pays for the level or it doesn't, which is the proof. And then the move.
Okay.
The
Let me
move.
write that down. Let me write
Okay.
that down.
Yeah, for sure, for sure. So you have liquidity where stops are above your highs and below lows.
Okay. And above highs and
if you
and then
want,
the reach.
because oh yeah, you said you
Because
like
honestly,
remembering
I
it
can't.
when you
I
read.
really, honestly, yeah, I can go
Mhm.
back and write it down in my
Yeah.
notebook on my own time
If
too.
you want to reread his
So
homework
that
and
can,
just refresh what we just went
yeah.
over, I'll just kind of graze over it and give you like a verbal
Mhm.
breakdown, and then you can go back and reread it. And then now you go on the
Mhm.
chart, you'll probably have it a little bit more firm. So we'll just kind of go
Mhm.
over it. And then so the move. So after the proof, the move, the real leg starts once the fuel is taken. So every tool in this manual answers exactly one of those four questions. The levels say where, the volume says whether it was paid for, the structure says which way it's going, and the verdict says what
Mhm.
happened. So none of them predict, they just measure, and they arrive after price is already spoken. So Why the market does not matter. Nothing in the paragraph mentioned above mentioned a currency pair. It did not need to. Resting
Mm-hmm.
orders cluster at obvious prices because people put them there and people draw the same obvious prices on every chart they have ever opened. Yesterday's high, last week's low, the round number, the level that rejected twice. That behavior is not a property of foreign exchange. It is a property of an auction with humans in it. So this
Mm-hmm.
toolkit is an instrument agnostic by construction. Every threshold in it is a ratio rather than a fixed amount. Volume is measured as a multiple of that chart's own baseline. So if let's say on one chart you're looking at it, right? And the baseline
Mm-hmm.
of contracts that are coming in are about 10,000. But out of nowhere, 17,000 or 50,000 contracts comes in and it's in favor of one direction over another. You now know
Mm-hmm.
there's active participants in that market. So that's what that's
Right.
referring to. So the volume is a measure as a multiple of that chart's own baseline and ranges as a multiple of that chart's own average. Delta as a percentage of that day's own total. So the delta is essentially telling you how many sellers and like the strength of the sellers and buyers. So
Okay.
imagine you have it can only basically on both sides. So like whether you're buying or selling, the maximum is 100, the minimum is 100. And what you'll
Okay.
notice, what you'll notice is when buyers are in control and that the delta is saying buyers are in control, it'll only go so high before it starts to spin back around. So most times on a chart, it'll go up about 60 and then it'll start to
Mm-hmm.
extend and you'll look at the candlesticks and then you'll look at that where you are in the chart. And then that's how you can time whether you're going to fall in line with the sellers or not. But it's best to wait for it to cross back at the baseline going into the sells. So now you know,
Yeah.
okay, the pressure is shifting. So the tool will go over that. And then to show you like an example of the cumulative delta, it'll be on the bottom right here. So it's this white,
Okay.
the baseline is this white line, right? And then it's gonna have a green and red line at the bottom. I don't know why it's not coming. Oh, it's because I'm not on a 15-minute. So I guess I can give you a prime example of this happening last night. It was this setup right here. So we were watching this last night. I sold first, and then when I sold, I kept looking. I noticed there was no sellers in the market with this green
Mm-hmm.
line, and that has to do with the cumulative delta, the flow. So it says right here, buyers are at 17.3% of the day. That means the buyers are in control of the market right now until they ain't.
Okay.
And that same 17 number you see here is also right
Mm-hmm.
here. So if you hover over, it says delta percentage of day
Wait, wait,
volume.
wait. Where you hovered over at? Because I seen
Oh,
the 17.
yeah, you see it popping
Hold
up
on.
on the left side. There's a little box that's popping up. I'm kind of floating
Oh, okay,
around.
I see it. I see it. I see it.
Yeah. So that's
Because my bad. I
17.
got like I'm
Nah, you
zooming in
good.
on
You
the
good.
screen because I can't see without my glasses.
But
So
you
I have to like
you good, trust. You good. So
fuck.
basically it's a lot to look at, and that's part of why that
Yeah.
going over the glossary is gonna help you start seeing, okay, this is what that's for, this is what that's for. And you're gonna train your
Mm-hmm.
eyes to use it secondary. So first you're gonna train your eyes looking at candlesticks, make an idea of like whatever. And you could be comfortable with think of it like your own art, right? Like, okay, I'm
Mm-hmm.
taking everything off. I want to see how can I test my knowledge, right? After you line up what you think should happen, boom, turn on the tools, and then you're gonna be like, oh shit, yeah, what I think should play out based off of what I'm seeing. And then
Yeah.
you could time everything using the tools. So that same 17% you see, anything in this table right here is really already right here in number form, but the table brings it there to make it simple. So that's why on your phone, like all the visual stuff you is still a representation of the number stuff here, right?
Mm-hmm.
So that way when you're on your phone, you really only end up seeing this box, and that's damn near all you really need. And then you could turn on like the RSI, stuff like that. That's gonna be for later on. But the delta is at 18.3. You see it change. It was at 17. Well, it's
17
at
from
16 now. And then wherever I hover on this line, you'll see it changes. So if I go to the red part, right, it'll switch to red as well. And you see it
mm-hmm.
goes down all the way to about 14. and then it started, it was about 16 at most, and then it started to pivot back in favor of the buyers. Then buyers got in, that John jumped up 45. Then it came back down again, and you could see it's lining up here too. It came back down again, and then when buyers stepped in around right here, it was at 6, 10, 11, 8, 9, well, 12 was so 9, 10, 11, 12. So it's still floating low kind of. But you can also see the behavior of the market, even though buyers are in control, it's still moving up too. So that's how you know that's the direction that's pretty much winning. Plus it's lining up with everything else. So that's the delta. And that just tells you trade flow of the participants, active sellers with active buyers. Again, so it says why the market doesn't matter. Ratio right here. Delta is a percentage. Okay, so there's no number anywhere that assumes a pip, a tick, or a dollar. Point it at equities, indices, futures, crypto, or metals, and the calibration redrives itself from whatever it finds. So what that means is, you remember how on your chart, when you were on like your main menu, it has it in sections, and it'll say like Forex, stocks, cryptos, indices, futures. So that's basically what that passage is saying. Anytime you turn this tool on, it works for all of it. Doesn't matter what you're looking at. All the same rules are going to apply. So basically sessions. The session window ships on FX hours. So for a single exchange instrument, a US equity and index future with a cash session, set the session times to that market's actual open and close, or turn the session layer off and run on key levels alone. Volume quality, FX volume is tick volume from one broker rather than true traded size. On equities and futures, it is real. The relative volume logic works either way because it is
I
relative.
was so finna ask, what does RVOL
Yeah.
mean again? Revolve?
Yeah. But yeah, I had to ask the damn AI after I got this shit. I'm like, what is this? Then it was like relative volume. I was like, okay, bet. And the relative volume also on the tool, you can find it on the bottom right here in the middle. Or like right here, volume. So, oh, excuse me. No, right here, Arvo.
Arvo, okay.
Yeah, and it's gonna show it right here too, Arvo. So it's gonna match up. So you'll know the color will change on this when there's more participants picking up. It'll start to go like red, then purple, so on and so forth. So that's gonna, everything you see here, if you hover over to, it'll tell you what it is. And then what you'll notice if you look to the right, it's there somewhere. But yeah,
it's definitely there.
and that chapter that we just read is basically saying this tool shows you the 4 sessions based off the foreign exchange. But if I go to stocks, it's stocks. So there is no Asia session. There is no London session for stocks. It's only New York because we're trading all US companies. So it's only going to be New York AM and New York PM. And that's why the stock market is only open from 9 to 5. If that makes sense. After 5 p.m., they close, but foreign exchange will roll through. Like right now, we're about to go in Asia session on Forex. So if I go back, you'll see here on the Forex exchange, our Asia session is about to start. And you'll see there's 4 sessions in a day instead of just 2. So this is another reason why people like trading Forex, because you kind of get more, there's just more movement in a week versus stocks. But again, it's just more of an aggressive market. So now if I go back to the tool, so that's what that section is all about. So if you reread it, you can look up definitions and just kind of, I would encourage, try to like any words you see on here you don't really know. Just look into Google them. Yeah, Google them and then look into it. And then that way it'll kind of help you clarify stuff too. So the practical consequence is worth stating plainly. Learning to read one chart is learning to read all of them. The instrument decides the volatility, the session, and the cost of being wrong. It does not decide how liquidity works. What that means for how you read a chart. The levels are the destinations, not walls. A level is not a place price is forbidden to pass. It is a place price is attached to, because that is where the resting orders are. Expecting a level to hold is the wrong frame. Expecting it to be visited is the right one. The break and the trap look identical at the moment they happen. They are separated only by what is behind them, whether real volume paid for the move and whether the price stayed away afterwards. neither of those is visible on the candle that breaks. So the candle that's literally like pushing against it, you want to leave that
Mhm.
shit alone because you don't know what it's gonna do just yet. It's still testing it. So
Okay.
waiting costs one candle and saves most of the losses. Nearly every losing trade in this business is an early entry into a move that was going the right way eventually, and then the direction was fine. The timing just paid for it.
Yeah.
So
Which is that's something you say you'll experience too. It's like
yeah,
it's not that
it's
you're doing the wrong thing, it's just the timing.
exactly. Yep. And that's how they want it. They want it to be, it's a little hard for people to catch the
You
move.
like
They want to
that. Oh
manipulate
my
you out.
God. They are so manipulative. I'm like,
They do, yeah. They be trying that shit. Oh God.
that is so crazy.
Yeah, they
I'll
be
be
trying that
pissed.
shit. But this is why that tool helps you because even when you read through the passage, it's gonna explain anything you see here, whatever you thinking, ignore that shit. This is what it is
Mhm.
because this is the measurement. You feel me?
Yeah.
And we're not doing the measurement, the tool is. So that's gonna help you not second guess anything. And that's why when we took that trade for that 10K, we aimed for the STP because it touched that level, but notice it came back away afterwards. So we
Mhm.
were taking the trade with the mindset of we just want to go test the level. We don't even want what's past it because we don't know what's gonna
Yeah.
happen when it gets there yet. So that's why the key level showing up helps you a ton. You feel me? So now if I go back in here, it's gonna get into nitty gritty now. So let's close this. So sessions are what each family of tools is actually for. So session and key levels mark where the liquidity is before price gets there. The volume and the relative volume answer whether a move was paid for. And then the market structure says which way the chain is running. So you know which side is the trap. The verdicts grade what happened at the level in 3 words rather than making you derive it
Mhm.
or making you rederive it. The bias row and push counter keep the higher frame in view while you're looking at a small one. The testers tell you what all of it produces without you in the loop. So the testers, you can literally after this, if you want, you could be like, shit, let me um put on the script for one of the testers and I'm gonna put on these settings on this chart and see how things play out. And it'll automatically
Mhm.
backtest and tell you whether you would make money in a year or lose money or in whatever time frame you set. So there is a
Mhm.
whole section of how to use the strategy testers, but if you just want to get right there in the field, you set up the settings and
Yeah.
just kind of do the demo and just play around on there. And it's all money where it's like you're not gonna be attached to what you winning or losing. You're just gonna be seeing the
Mhm.
skill over and over. So now when it come time you get like a bigger count, whatever, now you have a rhythm of how you want to trade. Because
Trade.
again,
Yeah.
my goal is to eventually help you to where you can just make your own decisions and you're able to just like trust what you're doing. Because a lot of traders when they're beginners, they hinge on what the next person is doing and waiting
Doing.
for the
Yeah.
next person's signal. But you're never going to train the muscle of buying and selling when you need to if you're not practicing doing it day in and day out. So,
They. Yeah.
so that's why my tool is there because the tool is going to help you do that decision for yourself without having to even like hit me up, whatever. You could just go in the manual. I got some question about whatever. And as soon as you press whatever topic, it'll just shoot you right to that section, if that makes sense.
Okay.
You
That's
feel
all.
me? So now um, this is the part here. So how the market moves from everything is made since one picture of the market. Okay, so yeah. So it says here the chapters that follow the long version in the order the settings panel presents them. If a control ever seems arbitrary, come back to the 4 boxes above. It will be serving one of them. So what this is basically saying is the way this is lined up, it matches exactly how the settings are. So if you click chart suite and you press settings right here, you see how right
Mhm.
here it says sessions, tracker scheme, then it says session rate lines.
Mhm.
And then if you go a little further, it'll say ADR, AWR, AMR. You go further down, it says moving averages. Then it says liquidity verdicts. So the way
Yeah.
the way that's lined up in trading view on my operating manual is lined up the exact same way. So session and rate lines, key levels, the 4 hour level and setting navigation, the ADR, AWR, AMR, the STP, the moving averages, and then wiring the suite into the engine, the liquidity verdicts, the key levels, market structure. So all that is in the exact order that you see it. And then once you get
Okay.
to the volume engine right here, it's the same thing. So when you go to volume engine and you press setting down here, you have your sessions, your volume engine time, the Windows clock time, signal type,
Mhm.
trend filter, all of it's going to be aligned. So now how the market moves, the framework. Everything in this manual assumes one picture of the market. Prices move between pools of liquidity, and the obvious highs and lows on your chart are where those pools sit. This chapter lays out that picture in plain terms. These are interpretive frameworks and not laws. Nobody can
Mhm.
prove a specific institution hunted a specific stop, and no pattern fires on schedule. M and W templates fail regularly. The weekly cycle skips weeks, and 3 pushes sometimes becomes 5. Their value is a lens. They tell you where to look and what would falsify the idea. The measurements this toolkit makes, volume relative to normal, delta, range, whether a close held, are objective. The story you hang on them is not. So that's what I was saying earlier. They're
Mhm.
measuring everything. So you have to go with the measurement and not what you think, because this is all the numbers that it's weighing and factoring. So when the framework and the measurement disagree, trust the measurement. You feel me?
Okay.
So when the volume actually arrives, everything in this chapter so far describes what price does. This one is about when. Volume does not arrive evenly through the day, and it does not arrive at random. A large share of it lands on a schedule that is published days in advance, and the schedule is free. If you're sitting in front of a chart waiting for something to happen, the calendar usually already knows whether anything will. That is the single most useful thing a beginner can take from this page. The clock is knowable, the direction is not. So it says where to look, right? So volume around the schedule release. You have the ordinary session volume, and then it dries up because nobody wants to be positioned into it. And then the
Mhm.
release of the news happens and the market spikes, the volume spikes. Then it all arrives at once. The spreads widen, the stops get hit, and then the first move is often the wrong one at the time of the release. It's elevated and then it tapers off, it becomes normal. So the clock is on the calendar and the direction is not. So the shape of participation around the schedule release volume thins out before. So you could go back and read that as a refresher. But where to
Mhm.
look? There's 2 free calendars that cover this release. It's Forex Factory and then my FX book. Either is fine and they carry the same releases. Set the time zone to your own before anything else. Every mistake made with an economic calendar starts with reading the times in the wrong zone. Filter to the currencies and the pairs you trade and filter out the low impact rows until you can read the high impact ones fluently. So reading a row.
Mhm.
So this is what the news row will look like when you go on the websites right here, Forex Factory or MyFX. And one
Okay.
one row will show the time at like 8:30, and the currency for it is USD. It'll tell you whether it's high impact, medium, or low. So if it's medium, it'll usually be orange. If it's low, it'll be
Mhm.
yellow. And
Yellow.
then
Mhm.
and then red is usually like that's gonna some shit's gonna happen. So that's why nobody wants to be positioned into it right before the release. So non-farm
Okay.
employment change is the event that's gonna happen. And it says the clock is known in advance. This is the whole point. We know what time to even be there, which currency the release moves. So it tells you USD, the other side of the pair reacts to. So basically, if I'm putting the euro against USD, this is going to be the perfect folder to wait for, because
Mhm.
now I know there's going to be a result that comes out where the actual result releases, and the surprise is the move, not the number. So
Exactly.
so the number will release and then the move will happen. And then now after it calms down, that's when we look for our entry. So a previous quietly revised down can flip the reaction of a beat. Always read all 3. So basically looking at the actual, the forecast, and the previous. So the actual beat the forecast by 13K. So they before this release happened, they thought it
Mhm.
was going to be like 160K. And the previous release was 142K. But the actual release at 173K, which beat their forecast, and that
Mm-hmm.
that came up green for this folder, meaning the US dollar gained some strength off of just this folder. So
Okay.
that's usually how the news will work is you're looking at, because before the 173 pops up, this is usually completely, it's just going to be blank. And then at 8:30 they'll release the value and then you'll see it. And they always print in the red or green to let you know. So I'm going to show you an example on the actual website. So that way you can kind of see instead of that small example. But
Mm-hmm.
this is the Forex Factory website, and you can see right here, this is the folder. So we know at 8:30 p.m. we got motion on AUD, right? So there's gonna be a CPI release, and we want to wait for this folder to come out. So anything Australian dollar, we'll go look at those charts right now, Australian dollar, US dollar, and then we'll basically look at what our idea will be once the news hits. If the news hits and that shit spikes down, I'm buying the fuck out of it because we know our high time for prices to buy. We know the trend is supposed to go up, so on and so forth. But if the news
Mm-hmm.
drop, right, and it just breaks out of here, then we can wait for the market to wind up during London because we see London will let us know what's happening. And then we could just get
Yeah.
in to go target, the ADR. Or if you high risk trader, and you got the type of bread where, okay, I'm gonna just get in early before the news come out, you can either put a wide stop or you can still try to put a small stop and just hope you don't get shook out while the news comes out. If you're so
Yeah.
confident that the buys are gonna work out type shit, which measurement tells you it should work out. So that's why we wait for the release, because that's gonna give us the fuel of the move. And then now you can pay attention to the participants, like sellers and buyers, who's in control at that moment. If it's showing that it's red, the news drops, and then doesn't really move or doesn't budge, all that just
Mm-hmm.
got absorbed. And remember how I told you, when you have the J's at a high price,
Price. Yeah.
somebody got to be buying it for you to sell it, right? And the demand got to
That's
be
real.
high. So that's kind of the same thing going vice versa. Once you hit that price that's low enough and you trying to sell it off and nobody's trying to buy it from you, now it's gonna get demand's gonna spike up because they feel like it's low enough and this is the best time to be buying it. And they'll only spike up because now people actually want whatever they're trying to get now. So
Mm-hmm.
we'll go back and my FX book is the other website. So you'll always want to, before you even start looking at charts, this is really the first
Mm-hmm.
place you want to look. So that's why I sent out that email about updating it.
Email. Mm-hmm.
So that you just know off the rip, okay, bet. I'm not even gonna trade none just yet. I'm gonna go here, go to economic calendar, and then you'll just see right here the results. So we know all these check marks is done, and the time zone that they were saying, like you'll usually look up here, it says current time. You go to central time because we're in central time for Minnesota. And then right
Mm-hmm.
here, you feel me? It says medium impact. So medium impact and high impact are going to be good for you to start looking at because that's
Okay.
enough movement after the decision comes out. So you could be like, okay, AUD's gonna get news. You can go look at any AUD pair, wait for all this to hit, and then probably wait till London and then see if you want to find a move around then, or see if it gives it
Okay.
to you during Australian dollar. So we'll do that a little bit after this. So that's how the news folder works. And then as we said right here, if it's a high impact folder, usually it's a rate decision and CPI and employee reports. And the way to
Mm-hmm.
know like what the news will even do, because I'm gonna be 100. I don't really care about what's inside the details. I'm you know what I mean? Like nobody
That's
cares about
real.
the detail. The main thing is when it releases, the actual release here, what color is it? And how is that affecting it? So usually when you open it, it'll tell you a higher than expected figure should be seen as positive, and then a
Mm-hmm.
lower than expected will be seen as negative for AUD. So that's the way we know if it prints green or red, whether it's positive or negative. So in this release,
Okay.
the actual, you can hover over, it says better than expected. They expected it to be 7. The last time it was 8. The consensus, they thought the forecast was gonna be 7, came out to 11. So US dollar gained a little bit of strength there. But there was hella other news that affected it and made it red. And that's where you would have been sitting out to just watch how it wobbles before
Mm-hmm.
those charts that are trading with USD balance out to make the decision clear for you. So right here, We got that AUD, and then tomorrow the next high impact is gonna be 14 hours from now, so about 6:30,
Okay.
6:30 in the morning, so like New York session. And then for the Forex, the My Forex Factory, this is the most popular one people use.
Not they got. I'm sorry. Not they got Trump
This nigga,
all over there.
bro, they just
They
declared
fucking
some
pushing
war.
us.
That's the problem. These niggas,
What?
yeah, the Treasurer Secretary. Like,
Again?
I read the shit on stream yesterday through here. I'm like, what the fuck? These niggas tripping. It was this folder
Nah,
right
he
here.
bored.
And if you want, you can look at the source of this information. You can press latest release. It'll take you to the direct site. And then I read through all this. They was basically talking about how anybody that's trying to help Iran right now is smoke. So I'm like, bro, that's just crazy. Because these niggas really trying to
Smoke
go
is
to war.
crazy.
As in they trying to crash out about it. They trying to stop all the operation Iran got going on with
Like
the oil.
I don't understand.
Me
I
neither.
don't
I was
understand.
reading it yesterday. I'm just like, this shit is blowing me, gang. It is blowing me. The fact that that's the timing that we on and niggas is just trying to just shake back and
We
get on
trying to
their feet.
survive.
Literally, bro.
Exactly.
Literally.
That shit is
That's
annoying.
wild.
He's boring.
So I didn't know about it until I read that. But that's an example right there. And again, the websites are gonna be like highlighted here, Forex Factory, my Facebook. So then as we know, when the rate decisions and pressers being that like what we just saw right now was a Treasurer Secretary press. So the dude that spoke did a whole ass like press release, and like the folder didn't say shit like about whether positive or negative. It was just basically
Yeah.
saying there's gonna be a speech. We're just waiting to see what they say, and then that's what's gonna drive up demand or supply or
Demand.
the sentiment for the market. So then you have the CPI, and then you have employment reports and the GDP. So these are going to be the most high impact. The expected day's largest single burst of volume. Orange and medium is the sentiment, surveys, retail sales, secondary inflation, a real move usually inside the ordinary range. And then yellow is low. So minor prints, revisions to old data, often nothing at all. So actual forecast previous, which is this actual forecast previous. Forecast is the consensus, what the market has already priced. Previous is what the last release printed. Actual is the number itself that release. The move comes from the gap between actual and forecast, not from whether the number is objectively good. A strong number that everybody expected is already in the price and can do nothing. A mediocre number nobody expected can move a pair of full average days range in minutes. The textbook reaction for a growth, inflation, or employment release, actual above forecast tends to strengthen that currency, and below tends to weaken it. Some series are inverted by construction, unemployment rate, jobless claims, and anything else where a lower number is the good news. So read what the series measures before assuming which way beat points, if that makes sense. So how we saw just now, like greater a higher number was greater than or less than on some of the news releases, a higher number is worse for the pair and vice versa. You feel me? So you'll just have to open that folder, and the folder will quickly tell you they usually say it right there. So when you press this detail right here, it'll say actual greater than forecast is good for currency. So if we get anything greater than 0.9%, and it's like a big gap, like let's say it comes out at like 5% compared to this, then that's going to cause a drastic move in this market, and it's going to make the Australian dollar stronger. So I think there was a trade I was looking at earlier, the Euro Australian dollar, this one, and I was looking at potential sells. So this is the move I'm in now, and I'm only aiming for the STP right here, the safe take profit. You see my bias is short, the flow is sellers is in control, the trend is going down. And then that news we're waiting to release. So that's why it's moving hella slow. You see what I'm saying? You see the market participants, there's hella sellers right now. So if that news comes out and it just spikes right here, but doesn't go nowhere, then I know we're really probably going to go up, because they're probably just taking all these positions here. But if the news comes in and just closes beneath it and then gives me a clean bounce off the close or the break, then I know we're chilling. So, and the easier way to kind of get a sense of that is just zooming out, right? So you go up to monthly, see the overall direction. It's kind of still heading down.
Did you change your colors or no? They always been just
Um,
blue and black.
yeah, I've done blue and black for the candles because I like to
Mhm.
have the blue to represent being in profit, and then the black is like it's just when there's no more blue, it's about to turn around type shit. But you can
Yeah, no
have
facts.
your default colors are gonna be a black background, red and green, and
Uh-huh.
the tools are gonna be like red here, green on the bottom. So it's easy for you to already translate what everything means. But if you see red on the bottom, that means don't sell. If it's like a red caution, it means don't really sell down here because nobody's paying
Okay.
for this to be down here. The same way like a caution sign comes up at the top. It's like don't really look for buys because nobody paid for this to actually go up.
Okay.
And then likewise here. So that's why you see every time it kind of pivots. Same thing with the orbs. It's just to show you when price is getting exhausted or tired. And then if it lines up with a key level like a previous week high or something like that, you could trade away from it type shit. So
That's real.
you see it's exhausting here. So that's why I was saying if the news comes out and just jabs this, then I know it's not really going to go down. It's probably going to go up. But if news releases and it actually confirms a break and then it shows that somebody paid for it, then I'm chilling. I'm going to keep holding it. Probably go down to the
Mhm.
average weekly range. So that's a little example of like the Australian dollar. We're just waiting to see what happens with these three folders here. So now it says a strong number that everybody. So this is basically telling you about the vice versa. Why the textbook reaction so often does not happen. Take this seriously because it is the part that costs beginners money. The previous gets revised. A beat on this month's number alongside a quiet downward revision to last month's can be net bearish. The calendar shows the
Mhm.
revision. Most people only read actual. The number is not the story. On a rate decision, the move usually comes from the statement or the press conference that follows, not the decision itself, which is often fully priced. The first move is frequently the wrong one. A release is the single most reliable moment for liquidity to be taken in both directions before price settles, which is exactly the
Mhm.
sweep this manual spends its chapters on. A release is not an exception to the framework, it is a framework at its clearest. Conditions change, not just price. Spreads widen, slippage is real, and some brokers stop accepting stop orders around major releases. So if you try to put like I'm risking $10, sometimes the
Mhm.
broker won't even respect that. They be like, nigga, you shouldn't even be trading this right now. Nigga, you we ain't gonna respect
Yeah.
that $10. So if it go past that shit, you gonna lose more than what it is.
What it is, yeah.
Yeah, they won't fill the order. So some brokers do that, not all. A lot of them are pretty good about keeping you
What do
protected.
you feel like it's a good thing that they do that? Like they
Um,
looking out, right?
yeah, if they can close you out your position and it spikes against you, especially how fast a spike can happen with news, then yeah,
Mhm.
you feel me, like you want your stop to get out at least at the amount you wanted it to get out at. Because sometimes it moves so fast past your line, by the time they fill the order, it takes more than what you actually risk. So that's
Sure.
why, yeah, that's why they try to tell you like be wary of high impact news, because that's the one time brokers can't guarantee that what you want to risk is really gonna close that order fast enough before
Mhm.
it may have traveled too far past it type shit because of the speed. So uh yeah, sitting out and waiting like at least 5 minutes till after the release is pretty good. And that way you're not panicking. Because when I started off trading, nobody told me that shit. So I was sitting here,
Mhm.
I see the folder release. Now I'm tweaking. Oh shit, buy, sell, oh shit.
Mhm.
And I don't know what the fuck's going on. Nobody told my dumb ass nigga, you gotta wait for it to settle out and then make a decision from that. You feel me? It's going, even if it goes like say you had an idea, it was supposed to go long, whatever. Even if it goes that way, that's fine. It just guarantees, it confirms it for you. So now the next time it
Mhm.
winds up like a wind up toy, now I bet you can find that entry crystal clear because you don't wait for all the noise to quiet down and you see the direction confirmed for you. You feel me? So now next time
Mhm.
volume picks up, you wait for the next session or wait for a session to roll over a couple of times, let it maybe tap 2 times. So like London makes one low, New York comes back, makes a second low. Now you can be more confident on the second pass, right? So that's the idea of why this session tool showing you that the blue line in one direction is so useful for people that are new. Because a lot of times they'll feel like if they zoomed in like that, they can't trust putting their stop just above or just below, whatever the case may be. So in this case, if you
Mhm.
put your stops just above, it was protected. You put it just above London highs, protected. Just above NY, protected. You feel me? It wasn't until down here it started switching, and now they're protecting from the bottom. You feel me? So that's gonna help you like real time your decision, time your entry. You can go down to the 5 minute, and now you understand once you have your bias on a high frame, what is the fake move on a low frame. So anything that's buying should be fake right now. You know what I'm saying? And then if it keeps protecting these, then you could size it up using your long or your short position tool. Once you drop it, double click it, and now you got your entry price, your profit level, everything's done for you. And then you can size it up. So we'll remove that. And then so yeah, that's basically that with news. So how this connects to the tools. So a relative value spike at a scheduled time is not a signal, it is a calendar entry. The engine will read a release bar as a breakout grade volume because it genuinely is. Whether it is information is a different question, and the calendar answers it. Time of day, relative volume learns the release slots. The baseline is per time of day slot. So a release that lands at the same clock time every month gradually teaches the baseline that this slot is loud, which is a correct behavior. And it means a release burst reads as less extreme than a same size burst at a random hour. That is the comparison you want. Today, ADR and today STP move fast through a release. So let's clarify what this is talking about first. So the relative volume right here, we talked about how it's this yellow one right here, and it will also show up here. And I'm trying to find maybe a chart that has one that has more volume right now. So the ones that are going to start going up in value are going to be anything that's going to have more participants during Asia. So if I go to AUDJPY, these values will probably be a little bit higher on the pairs, but we'll see. Let's go. So this is at 0.22. And what you'll notice is like during the news, I guess we'll just skip to the section so I can show you a real example. So right here. So it'll look like this, right? So the color of it, if it's 0.8 or lower, it's quiet. If it's 1.2 or lower, it's ordinary. If it's greater than or equal to 1.2, now it's about a sweep grade of a move. So if a price moves and then this was yellow at the time and moved into the key level, it's probably going to sweep it. But if it's green, it was probably paid for it, it's probably going to break out actually. And if it's purple, that's like peak volume, 3.5 or higher, that shit's actually going to break type shit. You know what I mean? There's extreme participation, there's exhaustion, or there's news, and often the end of a leg rather than the start. So a lot of times this happens as like the last push, like the last push into whatever level, so that they collect more contracts to reverse. So that's basically what the relative volume is talking about right here. And then it'll go in depth with that section as you kind of read down. But if I go back up, all right. So now it says check the calendar once before the session and write down the times if you need to. You're not trying to predict the releases. You are deciding in advance and calmly which minutes you will not be entering a position in and which quiet stretches are quiet for a reason. That is the entire discipline. And it costs 5 minutes. Most operators who say the market did something strange were trading through a red folder they never looked up. So that's the simplest way to use this, right? So you go on the Forex Factory, my FX book, that's going to be your first step. Second step would be now going into the candlestick analysis and market structure breakdown. So there's 3 shapes to the market. Usually you'll have a push and it'll pause and then go sideways. And usually between the high and the low, price will stay in between it. And this means that it'll continue after this first push. So if it went down and goes sideways, it's probably going to continue down. Then you have the range, right? It's going sideways between one price and another price. And, you know, people buying and selling between that price. Nobody really wants to break out, but then it'll break out one way and start leaning, but then it'll come back and close within it. That's a reversal setup, and that's a fake out. So this is why when this initial move happens, It's
I mean, it
cool.
looked fake. I don't know.
Yeah, exactly. It's
It looked fake. I don't know how
it's
to
like
explain it.
literally you can
It's
you
just
will be
something that
the
just
part of
looked
the
like a trap.
liquidity, literally, yup. And
Hmm
this is where like when you wait for the range to break, this is the best play to do because after the break, you want to wait and see if it's gonna bounce off and continue, or you want to wait and see if it's gonna come completely back in the range and you could take trades going the other way. So a range breakout will look like this where it holds above and then it comes back and then it gives you that continuation. And that was a break that was paid for versus the break that was bait. So these are the only three ways the market can move at all times. It doesn't do anything
Okay.
else besides this. So once you see
Besides
price
those.
just constantly bobbling up and down, it's because probably there's no news release and it's probably in a range, probably, you know, just gonna be going sideways up until the next release.
Okay, so when you are experiencing one of those, like, do you ever like what do you do during that time? Do you just go ahead and
You wait.
close,
Yeah,
or you just
you
oh
can
you
just
just wait?
ignore it. You know what I like to do is wait until like London session, and that's partly why I have these green vertical lines because they
Mhm.
open at the midnight open. So you can see this one says midnight open, this line right here going sideways, and then it at a vertical. And usually what happens is the most volume will pick up for a clean move right after the open of midnight. So London
Mhm.
session opens, it'll pick up volume. At least you have some movement versus none. Whereas Asia, you see Asia just went sideways. So that's why they say
Yeah.
Asia session usually will set up a range. London will try to hit one side of it and then go the other way. So you'll see right here, there's a green line. Asia session created the range. London came in, they tried to hit the lows, they couldn't break it. So it went the other way. Same thing kind of here. Asia session created like a lower range between this low and this high. London comes and picks one side to try to attack, couldn't break it,
Mhm.
then it actually makes a clean move. So that's essentially the philosophy of like the cycles in one day happening. But now at
Mhm.
the same time that's happening on the small scale, it's doing the same shit on a bigger scale right here, where it's just ranging, right? So if I were to take like a rectangle between this high right here, this low right here, see how that range is happening here. But now if I zoom
Mhm.
out, this is the trippiest part. A range really is just that candle forming on the bigger time frame. So this is that range between that high and that low, that price where people had
Mhm.
like a value they're willing to buy and sell off of until now it's breaking out. Now we see the first sign of a potential breakout. We just want to see, is it going to hold above or is it going to come back inside of this box? See what I'm saying?
Yeah.
So now we know between yesterday's high and the previous daily high, previous daily low, this is our this is gonna be our range for the next day. And then we'll see how like the sessions kind of line up. So if the session wants to come and Asia session taps the low and breaks through, tries to show signs of reversal, we know it's coming back in the range. But if it does the opposite and it starts just going sideways even more, then London comes in, breaks out, gives us a retest, continue New York, and makes that
Mhm.
move up. Then we know it's because the daily is deciding to continue up, or the
Okay, that's
weekly
real.
candle is trying to go up, or even the monthly. But again, we understand like we're using that the measurements down here on the volume tool to help you really understand what's happening too.
Mhm.
So now that's where you'll identify those ranges. If there's ever a time you want to know is price actually ranging, look at where price basically creates a push and then just watch how it bounces in between. So this is another one, right? Between here and here, price just kind of went sideways, 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 kept hitting the highs, couldn't really break, finally starts to go down. They do the fake out right here because they made it seem like it was gonna break, and then they came back in, and what
Mhm.
they do? They go the other way. And you would only know this is manipulation if you would have went up on the daily. And you look at what the candles were doing. So this was where the fake out happened. So in real time, at one point, this shit looked like it was finna tank to I don't know what,
Yeah.
you know what I mean?
Yeah.
But they got everybody in that bitch.
Yeah. I don't know what.
They got everybody.
That's
And
crazy.
that would you only would have known because like you see how I told you the moving averages tell you the sentiment. So we knew based off the green being above red, the sentiment is an uptrend. It's a bullish market right now on this chart. So because of
Mhm.
that, when it came, we knew, okay, we might be looking for buys right here, not actually selling. But yeah, that's how that goes. And if you don't want to be part of the early move down here, then just wait for it to correct itself. Like wait for it to swing the
Yeah.
other way, and then wait for maybe one of the sessions. Like right here, you could have caught it in London. You would have been like, okay, cool. The low is set. London came, it didn't go nowhere. So now I see this is where I want to trade. So you want to usually start your trading day after this green line because you see the Asia range. London comes, it picks a side. New York retested that side, showed you more and more that it's gonna go down. You feel me? So using the session
Mhm.
rollover helps you. It helps you a lot with that. And then now we move on to the market maker cycle, which describes the accumulation and the distribution. So that's basically what we were just looking at: how the market accumulates and then how it distributes it. So as a repeating two peak or two trough shape in the M cell model price rallies,
Mhm.
it so for example, in this M distribution model, the cell model, price will give you that push towards like the previous day high, that pink line we always see on every chart. And then it'll create a neckline and then it'll come back and they'll grab all the orders. Because remember, we talked about how liquidity is where everybody puts all their stops. So if people
Mhm.
sold from here, they probably risk like $10 and put it above here. So the M will usually come and it'll take out all those people's orders. And then everybody that thought it was going to buy and they put like a pending order to be getting into a buy when it passes, they get all absorbed in that one spot. So it's like two different traders' decisions happening
Right.
that's
Yeah.
getting violated by the stop hunt. And then once it comes back in the zone, you know that was the stop hunt. So now
Mhm.
once it comes to the break the neckline, this is where now you look for that retest to get in. And
Mhm.
the shift is a sign of like, okay, the trend is going the other way now. But you don't really want to get in on the first one, but this is just a model of a M and a W pattern, right?
Okay.
So the
Makes
W
sense.
is the same concept. There's a previous day low, price come hits it, and then maybe like Asia, London session.
That's low key like a perfect shape though of W and M. Like
Yeah,
I don't know, they both the same, just going opposite ways, basically.
exactly. And because the market only moves two ways, you're gonna see this M's and W's over and over and over again. So right here, you see it broke the neckline, gave you that retest. If it holds, you put your stop just below and you'll take whatever target. If it's STP, high ADR, whatever. So it says 3 pushes in the weekly rhythm. Inside those shapes, the cycle is usually described in 3 levels or pushes: an initial move, a second that takes the first one's liquidity, right? So yeah, the first one, so this one, and then it had this one that took the liquidity, and then the third that exhausts it. So they try to come back up, it's exhausted right here.
Mhm.
After which the reversal has fuel, and that is the same 3 count the engine tracks in its pushes versus bias row. So if I go in here on TradingView, that's this one right here, pushes versus bias. So our bias is long. This counts how many times it went against the buying bias. So it'll literally flash yellow when it's about ready to start going back into buys.
Mhm.
So that's what that tracks. And then most times that it's tracking that, it's creating this formation.
Yeah. Okay.
So the simplest version, oh wait, hold up. Okay, so after which the reversal has fueled, that is the same 3 count the engine tracks in its pushes versus buys row, and it is why the goal ships at 3. Sometimes it can go 4 times, sometimes it can go 5 times, but the more times it's hitting and not going nowhere,
Mhm.
that's just even more of a reason to be trying to buy after that.
Trying
So
to buy, yeah.
over a week, the pattern is often taught as Sunday through Monday. So on Sunday and Monday, there's a trend or a false move that sets the tone. Tuesday, the week's peak high or low is set. And then Wednesday and Thursday, the midweek reversal is happening. And then Friday, there's the trap. The day that punishes whoever chased the midweek move. So sessions carry the same idea
Why
at
is that like so many days for them to just be like,
yeah, they
all
move
right, we gonna be for real this day, and
awesome.
then we gonna
No,
pump
for
fake this
real
day.
though.
Like, what's up with that?
And
What's
what's
good?
happening with that is, and I'm gonna answer your question. What's happening with that
Hmm.
is the you know how I said there's 4 sessions in a day. So what happens is
Yeah.
you have the banks that come to work on Asia session and they look at what happened between the New York session the day before,
Hmm.
and they look at
Okay.
how they have to make their move to fit into the overall cycle of the week. And then London opens up and they look at what Asia just did. All the banks in Tokyo and shit. What did y'all just do? Now we can
Hmm.
play ball off of what y'all set up for us. So that's why you'll see a lot of times the levels respect each other. If it's going
That
up, they're
makes
going to
sense.
respect each other because the banks got to respect the level. So the last people can still make their bread off of whatever they set up for the following. So that's where that whole concept comes in. And there's the manipulation that happens on the days of the week because that's going to kind of get into the candlestick anatomy. So you're going to see why that happens too. So sessions carry the same idea at smaller scale. The Asia range gets rated at the London Open. London's extremes gets rated in New York, and then liquidity is taken where it accumulated at the moment a fresh set of participant arrives. So the simplest version of all this, if all the above collapses into one sentence, let it be this one thing. Price ranges and then break either fails or holds. A fake out is a range whose break failed. A trend is a series of ranges whose breaks held. Every signal in this toolkit exists to answer which of the two just happened on evidence
Hmm.
rather than hope. So the week as one pattern. So the week day by day and M forming. So right here we have Sunday, we have Monday, we have Tuesday, we have Wednesday, Thursday, and Friday. But in 1 week, this is how a weekly candle looks for 1 week candle, right?
Yeah.
So the motion, it opened here, it went up first, then it went all the way down because sellers took over, and then it closed right here. So that's why on
Oh
Sunday,
wait. Okay. Never mind. Never mind. Sorry, it's a slow moment.
no,
Okay,
you
I
good,
got it.
you good. So that's why it says the whole hunt in one wick, because this is the
Hmm.
bearish weekly close. This is 7 candles in one candle for the week. So if you went to the
Okay.
W chart, it's gonna look like all of this that happened over 7 days is just gonna look like this on a weekly chart.
That. Yeah.
And that's why that holds so much weight when you see this signal on a weekly. That's why the higher time frames have more weight than the lower time frame. The lower time
Yeah.
frame is just the noise that created this. So now on Sunday, Monday, Tuesday, you see Monday they gave the first push. Push 2 swept the highs for the first Monday. So they set the peak
Hmm.
high, and then they gave you the M formation here on Wednesday towards the midweek reversal. They give you this
Yeah.
bearish engulfing against it. And then now on Thursday, you can get into the move. And then Friday, any sellers that kind of came in here and they buy here, they tap the neckline because that neckline thing is happening right here. This whole thing.
Hmm.
So that's why that neckline is right here in the middle. And it would have went something like here, here, open here, here, open here, retest the neckline. You got your entry like right there.
Right there. Yeah.
And then it would have went down to like right here. So it went up one more time. And then if you hold it, that's going into Friday. So Friday, why is it trap as well? Is because when the close happens, it comes back a little bit. So anybody that came in, well, at least Friday here, this is actually Saturday.
Okay.
So it's considering 6, but we only get to see 5 days of the week.
5 days. Yeah.
Usually the Saturday, Sunday is going to be a gap in the market, and the candles won't even have printed. It'll just be a gap there. And that's why they usually end up filling it on the next week, because the next week got to do the same type of cycle. So
Oh,
if
okay. I was to say, how the hell is that Saturday? But okay.
yeah. So like if next week opened up, it'll probably open somewhere next to here. Well, actually probably open with a gap based off of how the Saturday, Sunday look. And
Mhm.
Forex market, they close Saturday, Sunday, or they close Friday at 4. So that's why here, if anybody sold late as hell, it snapped back and everybody was already getting out their sales for that Friday. and then
Yeah, if
Saturday,
they
Sunday.
close late, they better
Yeah,
be. Yeah,
niggas just it's too late. Like you already missed the
it's too
move from
late.
back up here. Where
Mhm.
Wednesday things was topping off. You could have came Asia, London, maybe found your move in here somewhere. You feel me?
No, that's real.
So
I
now,
will say this, my phone is on 4 and
ooh,
I have my my what you call it, my charger where it's like I have to set my phone on top of
mm,
the I have to set the battery against the
nah,
thing
charge that
too.
John.
And it's
You,
plugged up in
yeah,
my
charge
room.
that.
So
You good charge.
but
Do what you got to do.
yeah,
If you
what
wanna,
others yeah, I would say, do you want to pick up on this like
yeah,
maybe tomorrow too?
yeah, that's cool.
Or
That's cool. Cause I
tomorrow
think,
or Thursday?
yeah, that's cool. That's cool. That's
Same
smooth.
time though?
Yeah, and what I would even advise you just go from here and read through for the rest. Like go from the
From
weekly candle,
yes.
read through, and then
Uh-huh.
tomorrow, like whatever questions you tell me what you feel like you may have took away from it. Because again, I
Okay.
kind of want to see how well you could absorb it without me even maybe breaking it down. Me breaking it
Breaking
down
it down.
does actually help. I'm already able to tell, and that
Okay.
shit that'll help me damn near do the class version of it. You know what I mean? Where like if I'm teaching
For sure.
people, I can break it down easy, but. Yeah, let me
Yeah,
know. Let me know.
I'm definitely gonna like take some notes and stuff too. Like I said,
Watch
me
videos.
reading,
Watch
putting the notes
videos.
down, definitely gonna watch some
Mhm.
videos
Like
too for sure.
look up Kelly OG. Look up some different female trader day in the life stuff they do. Yeah, definitely.
Yeah, her trading view is a really good one for sure. Like I keep hearing
Mm,
about her, so
yeah,
definitely gotta check her out.
nah, that's
But
smooth.
yeah,
Good looking out though, for real.
we gonna I think that was a good like hour and 30, I
Yeah,
believe.
it's like an hour
Was it
30.
hour and 30?
Yeah,
Yeah, that was a good
that
hour
was a
and
good
30.
time.
So
That's a good
for
time.
sure.
And like I said, you could watch the news today. That releases at 8:30 or whatever. Yeah, 8:30 p.m.
Yeah.
So when that
Is that
releases,
already to everything?
huh?
Is that already linked to everything?
Well, you got to go on the My
In
Forex
the,
Factory.
or I have to go.
Yeah,
Okay,
the My
gotcha.
FX books. But if you go in your email, you could download the new manual I sent, and then you can go to that news section in the top. You'll see it in there
Uh-huh.
too. But it's Forex
Okay.
Factory and My FX book. But
Gotcha.
that's about it. And then yeah, just play around with the tool. Use the trading view. Look at different charts. Set your alerts on the session rate highs and lows, like I showed you, and then let
For
them
sure.
trigger off. Yep. But all right, Joe. I
Thank you so much again.
Oh
I
yeah.
appreciate it.
Nah, I appreciate you. Shit, you
Yeah,
showed
I'll
up.
let you
Oh
know
God.
no, for sure.
Yeah.
I'm thinking like each week we do like classes like Tuesday and Thursdays or like Tuesday,
Mhm.
Wednesday, Thursday, whatever your schedule is like
Yeah.
okay.
I mean, my
You available
schedule
for it?
anytime I'm trading for real is like damn near could be a class session. So, and I damn near want
True.
to sit down on the charts a little bit more because
Okay.
this card ain't looking too it's in a weird
Said
spot.
this kind
It's in a
of
weird spot.
right.
I don't know how I feel about the game. It's okay. It's just like it ain't fun like the one last year. So I'm like, shit, this might be the year I take this shit to a different level game in terms of like the earning potential is definitely there. It's just about consistency. And then now publishing this too, because I want to publish this project. And that way, if like one of my homies already said, like, gang, I support you. So if you sell it, whatever the price is, I got you, gang. I'm gonna buy it off you. I'm like, word. I appreciate that for real because
That's real
putting
smooth.
in time
That's real
on this
smooth.
project. So and it's not again, I've seen a lot of other content creators, they've been doing this similar type of tool where it's also doing like showing you the volume session, stuff like that. So it's not gonna be,
Mhm.
some like I guess not common, but it's just gonna be a unique one that I'm setting up. So but yeah.
Okay.
But all
For
right, Joe.
sure.
I'll leave you
That's
to it.
real.
Appreciate it.
Definitely.
Appreciate you
Thank
coming
you
through.
again.
Oh yeah,
For
for sure.
sure.
For sure. Peace out, yo. Love. Stay safe too.
Love you. For sure.
Mm-hmm.
Same to you.
Mm-hmm. Oh, so YouTube, all my other viewers, that was the first class session with my sister. I just basically recorded our session going over my operating manual that I'm pretty much using to make this tool for TradingView. So basically, uh, this tool is essentially gonna be like a training wheels I mean, like I just told her, a lot of people have this tool that are like similar. They have different variations of it, but I just took some of the best indicators I've come across and remodeled and redesigned them in a way that it's essentially automated to do the back testing and produce accurate measurements for what's to come for the days to follow. And if like we just broke down in this video, if you follow along with the steps and the procedures, you'll start to realize, look at the news folder, you'll know when the volume is going to pick up exactly. Use the tool to pretty much look at when moves are setting up and how they'll set up for you, what the bias is, where the manipulation is, and then you'll be able to get in alongside the actual direction of the overall market. So this is the first video of it. ITF Mob, I appreciate y'all coming through. Hope y'all enjoyed this video. She didn't know we were really recording. I just kind of recorded on the low, so I'm gonna ask her if she wants me to post it afterwards. She probably won't care, I'm gonna be honest. But it's also gonna be good for my sake too, because anybody that's gonna be like learning this manual, I'll have a YouTube video up for them to pretty much watch, and then that way they can go through the manual with how I broke things down, what I pretty much showed. So that's gonna be pretty fun. But yeah, man, I'm excited, gang. Like it's just a different time, bro. It's a different time, and I get it. Like I've had my glimpses of results, but in my mind, the knowledge is what has me so secure in day to day versus not having the knowledge at all. And you just kind of going about trying to figure out shit in life and don't know where that next bread is gonna come from or where that next big idea is gonna come from to really take care of you. So with that being said, man, definitely stay tuned for more content like this. I will be recording the next class that I do with my sister and posting it, and then that way you guys can kind of follow along with parts as we go through the manual and I break it down. And then yeah, any adjustments and stuff like that, I'll always address it and bring it up, maybe even add in the description. But yeah, definitely stay tuned for more. Subscribe to the channel if y'all feel like this was valuable. And yeah, with that being said, man, y'all take it easy out here in these streets. Stay safe and peace out, y'all, for sure.